There is something that happens within hours of a person's death that almost no family is prepared for, and almost no one warns them about in advance. It doesn't matter how organized the person was. It doesn't matter whether they had a will. It doesn't matter whether their spouse is still alive, whether their children are listed on the account as emergency contacts, or whether the family has been banking at the same branch for 40 years and knows every teller by name. The moment a bank is notified that an account holder has passed away, that account is frozen. Immediately. Completely. Every dollar inside it becomes legally inaccessible to anyone who is not specifically designated to receive it, and in most cases, the process of unlocking those funds takes not days, not weeks, but months. Sometimes longer than a year. Families find this out at the worst possible moment. They find it out when they're trying to pay for a funeral and the deceased person's account, which had more than enough money to cover it, is suddenly off limits. They find it out when a surviving spouse goes to the ATM and the joint account they shared for 30 years shows a zero available balance because the bank was notified of the death before the family even had a chance to process what happened. They find it out when an adult child sits in a bank manager's office, death certificate in hand, and is told that without a court order they cannot access a single dollar of their parents' money, and that the court order process can take anywhere from 6 months to 18 months depending on the state and how backed up the probate court is. This is not a fringe scenario. This is not something that happens to people who didn't plan. This is what happens to the overwhelming majority of American families, because the overwhelming majority of American bank account holders have never heard of a form that costs nothing, takes less than 15 minutes to complete, and would have prevented every single one of these situations entirely. And the banks that hold these accounts are not rushing to tell their customers about it, because the process of administering a frozen estate account is a service the bank provides, and in some cases, a service the bank charges fees for. The silence is not accidental. The confusion is not accidental. And the financial pain that families experience in the weeks and months following a death is, in a very real and preventable way, the direct result of information that was never shared with the people who needed it most. What happens to a bank account when someone dies is something that most Americans have a dangerously vague understanding of. The common assumption is that a will handles everything. If you have a will, people assume your wishes are clear, your assets go where you said they should go, and the process is straightforward. This assumption is wrong in a way that costs American families billions of dollars and countless months of legal delays every single year. A will does not give anyone immediate access to a bank account. A will has to go through a legal process called probate, which is a court-supervised procedure that validates the will, appoints an executor, inventories the estate, settles any outstanding debts, and only then distributes what remains to the beneficiaries named in the document. During this entire process, which in most states takes a minimum of several months and in contested or complex estates can stretch well beyond a year, the assets of the deceased, including every bank account in their name, are frozen under the authority of the probate court. Nobody in the family can touch that money. Nobody can use it to pay bills that are still coming in. Nobody can use it to cover the mortgage on a house the surviving spouse still lives in. Nobody can use it for anything, until the court says the process is complete. The average cost of going through probate in the United States, when you factor in attorney fees, court filing fees, executor fees, and the administrative costs associated with the process, runs between 3 and 8% of the total estate value. On an estate worth $200,000, that can mean anywhere from $6,000 to $16,000 consumed by the process itself before a single dollar reaches the people the deceased actually wanted to have it. And beyond the cost, beyond the delay, there is the emotional toll of a family trying to grieve while simultaneously navigating a bureaucratic and legal process that feels designed to be as complicated and as slow as possible. Now here is what changes everything. Here is the form that costs nothing, that takes minutes to complete, and that most bank account holders in this country have never filled out. It's called a Payable on Death designation, sometimes referred to as a POD beneficiary form. Some banks and financial institutions call it a Transfer on Death form, or a TOD designation. The name varies slightly depending on the institution. The function is identical, and the power of this simple form is almost impossible to overstate. When you file a Payable on Death designation with your bank, you are naming a specific person, or multiple people, who will receive the funds in your account the moment you pass away. Not after probate. Not after a court order. Not after months of legal proceedings. The morning after your death, The person you named on that form can walk into the bank with their own identification and a certified copy of your death certificate, and walk out with access to every dollar in that account. No attorney required. No court filing required. No judge. No probate. No waiting. The designation you made on that form overrides everything else, including anything written in your will, and transfers the money directly and immediately to the person you chose. This is a legal mechanism that exists in all 50 states. It was specifically designed to allow ordinary people to transfer financial assets to their loved ones without subjecting those assets to the probate process. It is offered at virtually every bank and credit union in the country. It is free. The form is typically one page. And the reason most people have never filled one out is simply that nobody told them it existed, and that not having one means their family could be locked out of their money for the better part of a year when they're already going through the hardest period of their lives. There are details that matter here, and getting them right is what determines whether this form actually works the way it's supposed to. The first and most important detail is keeping the designation current. A payable on death form that names a beneficiary who has since passed away is not automatically updated. A form that was filled out 20 years ago and names an ex-spouse is also not automatically updated. Banks do not monitor life events. They do not reach out when a named beneficiary dies or when a relationship ends. The form reflects exactly what was on file the last time you updated it, and if that information is outdated, the consequences at the time of death can be severe. The account may end up going back into probate anyway, or the funds may be distributed in a way that doesn't reflect the account holder's actual wishes, because the paperwork never caught up with real life. The right approach is to review every POD designation on every account at least once a year, and also to review them any time there is a significant life change. A death in the family, a divorce, a new grandchild, a falling out with someone previously named. The review takes minutes. The consequences of not doing it can take years to untangle. The second detail involves what happens with joint accounts, because many seniors assume that holding a joint account with a spouse or an adult child automatically solves the problem. In many cases it does help, because joint account holders generally maintain access to the account when the other holder dies. But joint ownership comes with its own complications. If the joint holder is also elderly or in poor health, both could potentially pass within a short period of time, and without a POD designation, the account would then freeze the moment the second account holder dies. Additionally, adding an adult child as a joint account holder gives that person full legal access to the account immediately, not just upon death, which carries its own risks in terms of the relationship, the child's own financial situation, and potential complications with Medicaid eligibility if either party ever needs long-term care. A payable on death designation solves the access problem at death without giving anyone access during life. The named beneficiary has absolutely no rights to the money while the account holder is alive. They cannot withdraw it. They cannot see the balance. They cannot make any decisions about it. The designation only activates the moment a certified death certificate is presented to the bank. This is the cleaner, safer, and more flexible solution for most situations compared to joint ownership, which is why elder law attorneys consistently recommend the POD designation as a foundational piece of any basic estate planning conversation. The third detail that catches many families off guard involves accounts held at institutions where a POD was never set up, even if the person had one elsewhere. People often have multiple bank accounts at multiple institutions, opened at different times in their lives for different purposes. A POD designation at one bank does not apply to accounts held at a different bank. Each account, at each institution, requires its own form. Many families discover after a death that the parent did have a POD in place at their primary bank, but had a second savings account at a credit union that was never updated, and that account is now frozen in probate while the first account was released within days. The lesson is straightforward. Every account, at every institution, needs its own designation on file. There is one more thing that almost no one talks about, and it goes beyond just the bank account. The same principle that underlies the POD designation applies to other financial instruments that are often even larger in value. Retirement accounts, including IRAs and 401ks, already use a beneficiary designation system that functions similarly and also bypasses probate. Life insurance policies work the same way. Brokerage accounts can often have transfer on death designations applied to them as well. The pattern is the same across all of these. Assets with a properly designated beneficiary pass directly to that person without court involvement. Assets without a current, valid beneficiary designation become part of the probate estate and get frozen until the court process runs its course. The reason this matters for seniors specifically is that many of the financial accounts that older Americans hold were opened decades ago, at a time when life circumstances were very different. The beneficiary designations on those accounts, if they exist at all, may reflect a reality from 20 or 30 years ago. A spouse who has since passed. Children who are now in complicated situations. People who were named when the relationship was strong and who are no longer part of the account holder's life in the same way. None of this gets corrected automatically. None of it is flagged by the institution holding the account. It sits in a filing system somewhere, waiting, and it only becomes visible when it's too late to change it. The process of fixing all of this is genuinely simple. It starts with a conversation or a visit to every financial institution where you hold an account. You ask whether a payable on death or transfer on death designation is currently on file. If one is not, you ask for the form and you fill it out. If one is on file, you ask to see who is currently named and you verify that the information is still accurate. Then you do the same at every other institution where you hold accounts. Then you do the same for any retirement accounts or brokerage accounts, reviewing the beneficiary designations on each. Then you put a reminder somewhere to repeat this review every year or whenever your life circumstances change. That's the entire process. It costs nothing. It requires no attorney, no notary in most cases, and no legal expertise. What it requires is awareness. The awareness that this form exists, that not having it means your family will be dealing with frozen accounts in probate courts while they're also dealing with grief, and that the institution holding your money will not warn you, remind you, or volunteer the information that could have prevented all of it. The people who handle estate administration for a living will tell you that the families who struggle the most in the months after a death are almost never the ones with the least money. They're the ones with accounts that weren't set up correctly while there was still time to fix them. They're the ones where a 15-minute form, filed years earlier, would have changed everything. Don't let your family be one of those stories. The form exists. It's free. It's waiting at your bank right now. File it. That's the one piece of information that could protect your family from one of the most painful and preventable financial situations they'll ever face. Now that you have it, make sure the people who matter most to you hear it too.